Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be comparing two midstream providers in the oil and gas industry. We have Enterprise Product Partners and Energy Transfer. So stick around, this is going to be fun. If you're new to the channel, please consider subscribing. Also hit that like button if you find it helpful. Now, back to your content. All right, so jumping right into it, we have Enterprise Product Partners on the left and we have Energy Transfer on the right. We're going to look over several key metrics and compare them side by side. So starting off with the share price, Enterprise Product Partners is currently trading for $24, Energy Transfer at $10.24. Revenue for 2021 was 40.8 for Enterprise Product Partners, and 64 billion is the estimated 2021 for Energy Transfer. They report earnings in about 10 days or so. On the earnings side, Enterprise Product Partners had 4.6 compared to Energy Transfer at 5.1 or 2.5 adjusted for if you take out the freeze that happened in Q1 of 2021. Now, the margin on that is for Enterprise Product Partners about 11% compared to 4 to 8%, depending on whether you go with the adjusted or the regular number that they reported. Next up, we have earnings per share diluted, and that's going to be 2.1 for Enterprise Product Partners and 1.81 for Energy Transfer. Now, earnings forward-looking, we're looking at $2.18 for Enterprise Product Partners and $1.33 for Energy Transfer. Now, on the price-to-earnings side, currently the price-to-earnings for Enterprise Product Partners is 13.5 with the forward P/E of 11.01. Energy Transfer is at 5.5 with the forward of 5.23. And if I adjust that for the earnings, that brings us to 7.7. Again, you're only going to see the price to earnings, including their, I think you should normalize it. So I adjusted it, so that gives it closer to 7.7. And that's assuming 1.33 earnings forward, and this price earnings forward is using that 2.18. So price to sales, trailing 12 months and forward looking, we have 1.3 and 1.18 for Enterprise Product Partners, and Energy Transfer we have 0.47 and 0.48. Lower number here being better, same on the price to earnings. Typically a lower number means it's a better value. Again, these are all in the same industry. Annual dividend, Enterprise Product Partners is at 1.86. $1.86 a year, and Energy Transfer is at 70 cents annually, and they just increased that a little bit to that 70 cents a year. The dividend yield is currently 7.77% for Enterprise Product Partners with a payout ratio of 85, and Energy Transfer at 6.22% with a payout ratio of 52%. Now, if you go and look up their payout ratio, it's going to show us closer to 33%. I wanted to show you something that's going to look more realistic when we eliminate the eliminate that one-time bang we saw in first quarter. So I think 52% is still good. Obviously, it's much more covered than 85%, right? So just I like to be conservative in the estimate, so that's what I do. All right. So one last thing on the dividend payout ratio. If we did a side-by-side comparison and brought up the payout ratio to 85% for Energy Transfer, that would bring their dividend yield over 10%. So just, there is a lot of wiggle room, and there is some definitely a lot of room to increase on Energy Transfer. And if you want to think of that in terms of percentage of a yield to their current price, that's the upside. Now, total long-term debt, Enterprise Product Partners has 28.1 billion in debt. Energy Transfer has much more debt on their books at 44.79, and it was higher than that up until recently. Over the last 3-4 quarters, they've been focusing to pay that down, in which they cut the dividend by 50% in order to support that goal, and that caused a lot of attrition out of the name. Now, next up, let's talk about revenue growth over the last 2 years. So negative 17% and then 50% for EPD, and for Energy Transfer, negative 28% and estimated 66% for this coming year after they report earnings here in about 10 days. Now, the price target upside and downside for EPD, I have them between $28 and $29 a share, and indicating about a 16 to 20% upside. And I think there's about a 12% downside. That would bring them to $20, $21 a share in the short term. Everything from what I'm looking at looks like oil prices are going to be supported. Both these companies, they're not directly tied to the price of oil, they're tied to volume, so please keep that in mind. Now, Energy Transfer on the other side is about, in my opinion, has a price target of 12 to 14. I have a much larger video on them indicating this, and then I think the upside at this point where they're at $10.24, 17 to 36% in the next 12 months. So that's my price target for both these in the next 12 months. It's not, total valuation. And then negative 28% is the downside. So they have been trading, again, just want to keep everybody conservative here. They have been trading within a band over the last 6 months in between $8 and $10, and they have moved back and forth between that band. So for anybody making entry, just know that there is some short-term downside with Energy Transfer. So just keep that in mind if you're making the investment. Now, one last nugget, if we look at Enterprise Product Partners and Energy Transfer, and we look at 2014 where they both hit their all-time highs, we can kind of get a feel for what their potential upside is. Granted, they are different companies, they're making different revenues, they're having different earnings, the payouts are different, we have different debt loads. Keep all that in mind, but if we just look at it at a very basic level, you have Energy Transfer has about a 200% upside from here. Enterprise Product Partners has about a 60% upside. So while Enterprise Product Partners looks to have more solid books, they have less debt, they have more consistent earnings, they have lots of good things on their side. That dividend yield has been consistent. They didn't drop it. They didn't cut it during the down year. They were consistent with their dividend. You can look at Enterprise Product Partners as a very consistent company and probably a little bit more conservative than Energy Transfer if you're looking for something with a very consistent dividend payout. If you're looking for something with more capital appreciation, maybe something that has more upside on the dividend itself, you could probably look at Energy Transfer. Granted, that dividend yield is not going to be bumping up fast, in my opinion. It's going to happen slowly over time, so you have to take that into account. Another risk with Energy Transfer, they do have a much higher debt load as compared to Enterprise Product Partners, so much so that they cut their dividend to address it over the course of the pandemic. Now they are going back to increasing it, but it will take some time to get back to their previous levels, if they even intend to go there. They haven't given guidance either way. So if you're looking at Energy Transfer, you're looking more for capital appreciation. But even if we look to the short to medium time frame, there is more risk with Energy Transfer on the downside. So with all that being said, there's the data. There's what I have to present. I hope you find this information helpful. I try not to give too much of my opinion one way or the other. Let me know what you think of the video. If you find this information helpful, please give it a like. Consider subscribing to the channel. I do videos on personal finance, investing, and stock analysis. I'll go ahead and put some links right here to my Energy Transfer videos and oil videos. Thank you so much for watching. My name is Frank Finance, out.